my favorite go-to investment, which is SGB, sovereign gold bonds, might go away.
It seems to be a magical instrument of sorts, right?
Is that a retail trap?
They had such ulterior motives in bringing out SGBs.
I would never recommend anybody to put their money in gold mutual fund. Investors should actually consider MobiKwik as an investment.
They're making 900 crores of revenue, and more importantly, they're making profits. And they're doing their IPO at a market cap, which is valuation of only 2,000 crores.
Right, their revenues are stagnating, and I think that's a big problem for the industry.
These are companies which will survive no matter what.
Are you catching a falling knife?
Should FMCG investors panic?
These big players that we are talking about are often slow in re-innovating themselves and being quick in the market.
Maybe that's the next step of marketing, the next step of how D2C and FMCG companies are supposed to grow in India. Who knows, they might be the next giant. Right? They have the potential to be that, right? Hi, this is the 5th episode of the Aftermarket Podcast, where we look to bring you the most interesting stories from the stock market. And our goal is to create that intellectual curiosity, that one spark in you that makes you interested in the stock market. And in today's episode, we have 3 major stories for you. The first one, we're talking about SGB, our sovereign gold bonds going away. And we'll be discussing in detail why it was introduced, why it is going away, and what is the future. And we'll also get into the very successful MobiKwik IPO that happened this week. And we'll be doing a quick analysis of the company. And for our third story, what is happening to the FMCG sector? Why is it not able to grow? Why are revenues not growing? Why are the company share prices not moving? That is our discussion topic. So as always, make sure you watch till the very end and let us know in the comments down below if you have any suggestions or if you want to participate in these discussions. Get subscribed to this channel if you want to see more, and also get subscribed to the Market Feed Clips channel, where we will be sharing small portions of this podcast. As always, welcome to the episode. The markets have not moved anywhere since our last podcast. Interestingly, the last entire week was about RBI announcement and the hype leading up to that. But now that the announcement is done, nobody cares, and the market just moved sideways. After
major
that.
consolidation this week is what we saw.
Yeah. So I think let's get started with the Aftermarket Podcast, the 5th episode of the Aftermarket Podcast. My name is Ajay. This is Nihal.
Hello.
And this is Sharik Shamsin,
Hi.
CEO and co-founder of MarketFeed.
But guys, before actually getting into our interesting topics or whatever, I have to address this issue, which actually pissed me off really bad, is my favorite go-to investment, which is SGB, sovereign gold bonds, which I actually invest a lot of my money into, pledge and trade, might go away. And that is really hurting me.
Yeah, man, I feel the pain, bro. That is what I have to say. I mean, gold investment, I think we've spoken about this before as well. Gold is a go-to asset class for all investors. And in India, the best way to invest in gold was sovereign gold bonds. And now the narrative, the speculation that it could go away, RBI not continuing it, it is definitely saddening. I'm also super sad. I feel the pain is what I'll say.
Yeah, and just clarifying, as traders, it is extra sad. SGB, for everyone it was amazing. For traders, it was extra amazing because it also was a cash component when you're pledging.
Yeah, absolutely.
And you could trade without any worries of margin issues, right? And that going away, I think, it deserves to be your story of the week.
I mean, yeah.
Yeah, but what is this narrative of it going away? I mean, maybe we should talk about that. Is it actually going away? Because there is no formal communication from RBI saying that, hey, we are stopping sovereign gold bonds. Such a communication is not out. But since even then, we see everywhere the speculation and this narrative and this discussion going around that, hey, sovereign gold bonds wouldn't be there anymore.
The reason for this narrative is because usually we see SGBs being rolled out yearly thrice or 4 times. Sometimes in 2021, I guess it was even 6 times.
6 times, yeah.
That SGB was rolled out. But since this financial year, there was no new SGB that came out. It was the last SGB came out only in February. So even in our budget, the actual budget which came after the interim budget, we see that some 18,000 odd crores was allocated for SGBs. But even though there was allocation and no new SGBs were released, people are speculating or showing their concerns that SGB might not come out.
Yeah, I can't complain as well, right? I mean, if this was something which used to keep on coming out like 3, 4, 5 times a year, and there was budget allocation as well, and then if it is not happening, then
Yeah.
there is maybe some merit to all these speculation as well, right? But before we move ahead, maybe I think we are jumping the gun here. We are moving too quickly, but maybe there are listeners who do not really understand what a sovereign gold bond is, right? So maybe let's take 2-3 minutes and quickly talk about what exactly SGB is.
So the sovereign gold bond scheme was introduced by the central government and RBI in 2016 for just one purpose. They wanted to give you an alternative to purchasing physical gold. Okay, so everyone in India loves to buy physical gold and to invest in it for the long term. So RBI said, hey, we'll give you something amazing on the other side, and which is going to be an alternative for you going to the jewelry and purchasing physical gold. And in order to promote that product, they gave certain benefits along with it. So one was a 2.5% annual interest that they'll pay out on the whatever is the gold price at that time. The second thing was a long-term capital gains benefits that they had along with it. Whenever you're going to sell this whenever you're going to sell this bond issued by RBI, you don't have to pay capital gains after 8 years.
Yeah.
Right? And that was a huge benefit, right? I know people don't think about it actively, but if you buy gold and you're going to sell it, you have to pay tax, right? People don't actively think of it.
Yeah, but when I look back now, in hindsight, it seems to be a magical instrument of sorts, right? One is fundamentally it is already giving you gold returns.
Yeah.
Yes.
On top of your gold returns, which is already what CAGR of gold over the last 10-20 years is slightly under 10%.
Yeah, 8 to 9%.
8 to
it has
9%.
gone.
So you're already getting your gold returns.
Yeah.
On top of it, you're getting a free 2.5% interest. And
Yes.
then you don't have to pay capital gains on your gold returns. And this is cash component as well.
Yeah.
Like you rightly said. So all these put together, now when I look back, hey, it was a magical instrument of sorts. But that is where my question is coming. Like, while it is a magical instrument of sorts, why did the government even do it? Because government is actually having a cost of capital of nearly 10%. Gold returns plus 2.5%.
Yeah.
So cost of capital is nearly 10%. Why did the government even bring it in the very first place?
So India has a high demand for gold as a storer of value. We love investing in gold just for the sake of keeping it in our lockers and keeping it away after, I don't know, even gifting it for marriages. So in India, gold is mostly imported into the country. So we are a net importer of gold. And whenever these gold imports happen, we pay for it with dollars.
Yes.
Yeah.
So the government in 2016, they noticed that this was causing a lot of stress to the Indian rupee. A lot of gold was being purchased by Indians. And they thought that this alternate mechanism or this method will keep all the rupees inside the country. There will be no need for forex exchange. And they thought that this will be a net positive for the economy. So hence, that is why they introduced it. In hindsight, might not be such a good logic. But at that time, right, especially when the rupee was depreciating so quickly, I would say it was a good experiment to have for the
So
government.
they had such ulterior motives in bringing out SGB, something which we can understand here. But now that we understand, hey, they brought it out because of that reason, and all investors loved it, including us. We loved that, as you rightly said, our go-to gold investment
Yeah.
instrument. But now, why is the government even thinking to not come up with more SGB tranches? Why is government moving away from this?
So that is because if you look into the overall investments that came into SGB, according to financial year 23 up to March, the
23-24?
FY 23-24
Okay.
March data, if you look into, there was 4.3 lakh crore worth of investments that flowed into SGBs.
Okay. So people have invested 4.3 lakh crores in
Yeah,
SGB.
4.3 lakh crores. And now the question that you asked, right? So why are they doing this, and why are they taking that capital hit of another 2.5% additional interest they have to pay out? So 4.3 lakh crore on that 2.3% interest, 2.5% interest which they have to pay out every year is coming down to somewhere over 11,000 crores every year.
Interest payout alone.
Interest payout alone.
Okay.
And that is the amount which Indian government or our central banks are obligated to pay the investors.
Correct, because these are bond holders and the
Yeah.
government is having a responsibility,
Yeah.
right, and a duty to actually pay out that interest rate because it's a bond. Yeah.
And that 11,000 crores, 11,000 crores
Yeah.
is taking a very big dent on our budget, and that is increasing our debt.
Yes.
So when we look into the debt GDP ratio of India, this is causing a slight dent to that. And when Nirmala Sitharaman said that they want to bring down the debt to GDP ratio from some 58% to 56%, there are few steps that were taken, and this could be attributed at one step that trying to attack that debt to GDP ratio, bringing down that percentage.
So this is interesting, right? I mean, government had one objective of saving the economy, saving rupee as such. And that is why they brought this out to some extent.
Yeah.
And maybe that's where I'm going back to the term you use, which is an experiment. Probably this was an experiment, is what you're saying. And
An
they did it.
expensive experiment.
So maybe their objective was met. Maybe I don't know. Maybe rupee is. I can't even say that because rupee is definitely not having a good time. It has not been having a good time over the last many years as well. But let's keep that apart. So government came out with an objective, and that is to protect rupee and protect import, export, and all of those. And that's why they came out with SGB, and it had its own many years, so many lakhs of crores raised from the market, and now they are probably discontinuing it, and it looks like most probably it is being discontinued. So what I'm thinking is, like, what happens to the original objective now? Is it met, not met? If it is not met, then what would government do now? Are there more interesting experiments which could come out? This might be interesting for investors like us.
So from 2011 to 2016, rupee depreciated by 50% against the dollar.
Okay.
Right? And that was the time in which they decided, hey, we have to do something. Okay, there is petroleum import, there is gold import, there are multiple categories. What all can we attack? And they chose gold as something that they can attack. And if they knew that if they started selling gold bonds alone, no one would be interested.
Yeah.
Hence, they had to give some additional benefit, 2.5% tax benefits along with it, right? And if you're looking at the last 5 years data, dollar to INR, yes, rupee has again depreciated, but it has only depreciated by 20%. So to some extent, correlation is not causation, but we can say that things are in a better place at least right now, that the same situation in which the government was in 2016, it does not exist, right? So they can take their foot off the pedal for a bit. Maybe they'll come up with it next year. They'll take a break of 2 years and they could come up next financial year.
They
that
could maybe
happen.
always use this as a lever
Yeah.
whenever this problem happens from a larger import-export economy, rupee value problem. So they could always use this as a lever maybe.
Yeah.
Like they might wait out, and if things are going bad, they might come back again. But there's also this narrative of our exports increasing. I mean, the China going away, India becoming the manufacturing hub. So we are exporting a lot as well. So when we are exporting a lot, then that import problem is also not playing out. So maybe it is a good sign of the economy. Maybe economy getting better is why SGB going away is maybe we can find our peace there.
Could
I
be.
don't know.
But for investors, nevertheless, I think it's a
Absolutely,
losing
yeah.
situation.
Yeah, I
Because-
remember us giving a farewell to Bank Nifty weekly expiry. So similarly, sovereign gold bond. I know it's not formalized yet, but if it is formalized, if it is going away, we should definitely do something about it. We should mourn the loss of sovereign gold bonds.
I think even if it is not fully taken away, there could be, the benefits could be cut down, tax benefits could be brought down, the interest portion could be brought down. So whoever missed out on that initial wave of SGBs, I feel bad for them, right?
Yeah.
So it was an amazing period for you to invest in gold. We in our videos also multiple times talked about it. 8 years tax free, right? That itself is a major thing.
But let me just add this here. So even the primary new offerings are what is being speculated that is being paused or stopped. But from the secondary market, you can still buy. All the SGBs which are already live, which has a maturity date for the next 8, 7, 6 years, like from the moment it started. From the secondary market, you can still go and invest. So maybe for the next 6, 7, 8 years, you can still maybe benefit from it, given there's liquidity, given people want to sell it and all of those. But just adding that as a
that
point.
is still
In
there.
2020 and 2021, I personally bought it from the primary market. It was a very smooth process. But I think mostly you have invested through the secondary
recently,
market.
I think like a few weeks before, because I want to invest some more money and I want to pledge in for margin and sell options with it, I did buy SGB from the secondary market. I think 3 or 4 weeks before. It was a good time to buy gold. It did go up after that. But anyways, you can still buy from the secondary market.
So I think the only thing that you have to be wary about is the price, right? Are you getting it at the right price?
Right.
If that is sorted, then yes, you can still continue to enjoy the benefits of SGB by buying it from the secondary market.
Yeah,
But again-
but still, the crux of the matter being, if sovereign gold bond is going away, what is the best way to buy gold?
So there are only two best gold investment options right now available. One is digital gold. Second one is gold ETF. So if you are looking at a longer time horizon, so let's say 5, 10, 15, 20 years you want to invest into gold, digital gold is the best because there is no expense ratio, there are no other charges, there is only one charge which is 3% GST
At the time of purchase.
at the time of purchase, and there is no recurring cost to it. But if you are looking to invest for let's say 1 year, 2 year, 3 year max, then you can look into gold ETFs because they have much lower expense ratio, which is 0.8%, but that is a recurring expense. So if you are investing for 5, 10, 15, 20 years, every year on the value you have to pay 0.8% 0.8%
Expensive.
0.8% expense ratio. So if you're looking for long term, invest in digital gold. If you're looking for a short term, invest in gold ETF.
Yeah, and it doesn't add up like 0.8% every year, right? So it adds up like if the value of gold goes up,
Yeah.
you end up paying higher and higher expense ratios in absolute terms
Yeah.
based on your first investment. But in the other case, it's just 3% of the first investment.
Yeah.
Digital gold,
Correct.
3% of your first investment. I
Yes.
think that's still a good win for long-term
And also
investors.
with digital gold, after a point of time, after a lot of gold accumulating, and in your life, if you come across a point where you actually need gold for making jewelry or whatever, then you can actually redeem digital gold as gold, and then you can give it to jewelers and make jewelry out of that as
Absolutely.
well. Where you're not actually selling it, and then there's no tax liability also, probably
Yeah.
is something which I
Yeah.
understand. Anyways, traders who always invested into SGB, pledged it for margins, and traded FNO with that, they're definitely hit with it. I don't think we keep saying, right, as FNO traders, our only job is to adapt to whatever SEBI is coming out with, whatever RBI is coming out with. So we'll have to continue our life. That's the only thing to be done. So that's where I would love to move to the next story. And the next story, I can't help it. I am sorry. I'll have to talk about another IPO again. I was worried talking about another IPO in this episode of the Aftermarket Podcast, because in the last episode also we spoke about Vishal Mega Mart's IPO, and I didn't want us to get branded as this show where we are always talking about IPOs, but I can't help it. I mean, this week again, so this is not an IPO analysis. I don't want to even talk about the IPO of this company, and the company, obviously, I hope you know about it already, is MobiKwik. A payments company. More importantly, MobiKwik is again a company, a product I've used extensively in the past, and then I thought they just vanished. I've been hearing about MobiKwik for a very long time. I even thought that they actually shut down and they went away, and all of a sudden now I'm hearing that hey, they're coming for their IPO.
Yeah.
So again, just making things clear, I don't want to talk about MobiKwik's IPO. Is there going to be IPO listing gain? Should you be investing? That's not the point. I just want to understand what the company is doing, what has been happening, and eventually going ahead as a stock, will that be interesting, is something which I want to talk about.
So the last thing that I remember about the company is in 2021, they came out with an IPO. But they decided to withdraw the IPO application because they cited weak market conditions in 2021 for that matter. And now they're coming out with it again. In between all this time, I thought they were actually dead, right?
Yeah.
I thought they were not able to raise money, and they slowly had a very slow death. That's what I actually thought. So, Sharik, can you tell me what actually happened to the company? What are they doing today? Where are they at right now?
Yeah, you know, it's interesting to hear that they tried IPO in 2021, because I feel and I see that from 2021 till now they have grown a lot. So now that I'm looking into the company, because it's intrigued my curiosity a lot, I'm looking into the company, and it's very interesting. They're making 900 crores of revenue, and more importantly, they're making profits.
Oh, nice.
I mean, in a market where, hey, Paytm is there, Paytm still not making profits, and they're making profits. I know the numbers are less, it's just 14 crores of profits, but hey, profits. So 900 crores of revenue, 14 crores of profits, and they're doing their IPO at a market cap, which is valuation of only 2,000 crores. Which is very interesting, right? So the story being, hey, they have survived, they have thrived, they have somehow been staying alive and growing and making profits. Things are very interesting. And today they are doing a lot of different stuff. So early in the days, I used to remember them as a wallet sort of an app where you can load money. And
Paytm, Freecharge,
Yes,
MobiKwik,
exactly.
they all were in the same
that was the
sentence.
trio, right?
Yeah.
So you can do recharges, you can buy tickets, maybe such sort of things, which they still do. So that's one. Their how do I put this? B2C payments plus all of those business. Then they have this heavy B2B payment suite, just like your Razorpay, Paytm, the payment gateway, the Soundbox, the card swiping machine. All of those are also businesses for them today. But the largest lever that they are playing around with, I just read an interview of the founders as well. So they are playing around a lot with distributing financial products.
Got
They're
it.
distributing loans a lot. They're distributing a lot of loans to Indians. They're distributing mutual funds. So they're getting into financial products as well. So today, if you look at them, they are a pure fintech play. They have payments for consumers, for businesses, and they have financial product distribution.
So they understood that instead of manufacturing their own financial products like wallets and trying to make that appealing and reach everyone in India, they decided to distribute others' financial products. That's an interesting approach.
Yeah.
And numbers are not that bad. I mean, they have 40 lakh merchants on the platform, more than 1.5 crore users that they are active user sources, what they are claiming. So things are looking good. It's just that we haven't been hearing about them and none of us are using it.
Yeah.
None of the people in our circle is using it. So
Yep.
that's where that's where I'm surprised. I mean, who is using it? How are they having this business? It's very interesting.
So even I got curious, right? When I saw the MobiKwik IPO is coming up, I started looking into it. From where they're doing business, what is happening, how are they able to get these millions of customers running, who is using it? So then when I got curious and when I was looking, I found out that they are the biggest in the small ticket loan industry.
Oh.
So people take loans, right? They take small loans, they take big loans also. So somebody who's taking less than 5,000 rupee loans is going to this MobiKwik.
Less than 5,000.
Less than 5,000 rupees, and they are the market leaders there. They captured the market. More than 64% is like under them.
I am unable to wrap my heads around. Is it a good or a bad thing?
It's a double-edged sword, I would say, because think about it. Who would take 5,000 rupee loans? Mostly very small people who doesn't have much of income, or students maybe who are taking money for their quick trips or some pocket money or something of that sort, which are unsecured loans. And if those doesn't get paid, there could be a problem.
Well, while I understand that these are like not high value customers,
Yeah.
also because these are like small ticket loans, like 3,000, 4,000,
Yeah.
5,000 rupees, isn't the chance high that they'll somehow get it repaid back because it's just 5,000 rupees and they don't want their CIBIL score to be hit? I'm not sure if they care about their CIBIL score, again, because of the class of the or the type of the user, maybe including students or
Yeah.
stuff like that. But I'm also thinking because the amount is less, wouldn't they repay them very quickly or
But
on
again,
time?
but here is the thing, right? So actually they are not lending the amount. So they are tied up with again NBFCs and banks. So these just people are like the mediators. So people would come to MobiKwik app, then they would actually connect it to the NBFC or a bank, and those banks would lend money to the actual customer.
They get a commission.
So these guys are just playing with the commission, and they are dominating there. They have 64% market share, and they are
that's
like
what is actually interesting. Keep aside the discussion of, hey, is that a good or a bad thing?
Yeah.
Dominating the market, having 60% market share in a market, big enough market, definitely is a good thing for the company. Yeah.
You know, I was actually going to take it into a point where these are not valuable clients. These are not premium clients. But now again, I'm rethinking that because the last time I opened Swiggy,
Yeah.
there is MobiKwik inside Swiggy. Have you guys noticed it?
Yeah,
you
yeah,
can,
wallet.
Swiggy or Zomato, I'm not sure. You can pay using MobiKwik wallet, like how you can pay with Amazon Pay and everything, right? And inside that, I think they have a buy now, pay later option. So this 5,000 rupees can be the cream of India using that buy now, pay later option, right? They have not revealed it properly in their statements. But there is a high chance that these are not random unsecured loans, but these are amazing customers who are buying every single day on Swiggy and Zomato. Instead of using their credit card,
Yeah.
they're just using the buy now, pay later option. But yeah, RBI has been clamping down on that pretty hard.
Yeah.
So maybe that's not... that's the reason why they've not really specified it in their DRHP and try to publicize it.
losses.
Yeah. So now that we have some understanding that their payments business, anyways, that's their bread and butter, has been doing well. And now
Yeah.
you are definitely making a point that their loans business is also,
Absolutely.
they're leading a market. So that's where I was looking into their financial distribution business. And there also I'm seeing very interesting numbers. So they have this thing as a statement put out by the company saying that their asset under administration, which is, it could include their mutual fund advisory business. That is all the money that people have invested via MobiKwik into mutual funds. So that could be the asset under
Yeah, because they're a
administration.
distributor.
Correct.
They'll call it
Asset under
this.
administration rather than asset under management. And
Exactly.
AMC would probably use AUM.
Yeah.
So anyway, so the number here is In 2022, they had around 300 crores in asset under administration, and today it is over 6,000 crores.
Damn.
And that's in 2 years, from 300 crores to 6,000 crores. I think is crazy. I think it's
Absolutely
good
crazy.
growth. I think it's like really nice growth. So I'm not even going into like why they grew or how they grew. So my point is, if they were able to show that growth, there is something that they are doing right. That is
Yeah.
why they are able to grow. And if they are doing something right, and like you said, now if they're like raising money, getting this capital, and if they can leverage and use this capital in the right way, which I think they have been doing in the past, maybe things are interesting, right?
Yeah, everything sounds interesting, everything sounds promising. But my major concern is, there are so many consumer facing brands coming up with their IPOs these days. Is that a retail trap?
So Swiggy, Paytm, Zomato, Nykaa, even Ola Electric for that matter, these are very popular consumer-facing brands. And whenever they come out with their IPO, they're highly likely to be oversubscribed because we all are very attached to, or we see these brands every day.
Yeah.
Now, as always, at least we in our circle, in our viewers, we have to be very sure that these brands are doing really well, that you look beyond just the brand and the name and their marketing. You look into their fundamentals. Are they able to grow? How's their management? Are they able to raise funds properly? So all these are the things that you should be looking into before you decide to invest into any IPO.
So now that we understand that we have to look into so much of data and points before investing into any company, either it is an IPO or any direct investment, Sharik, do you think investors should actually consider MobiKwik as an investment?
I have my good and bad points around MobiKwik as a stock. So the good points being, number one, they are making a revenue of 900 crores and their IPO is coming out at a market capitalization of only 2,000 crores. That I think is great valuation. Number two, they are making profits. Even when companies like Paytm in the same space is not making profits, they are making profits. That is something which I definitely respect. Point number three, there is this concept of cockroach companies, cockroach startups. And the logic there is these are companies which will survive no matter what. And I feel MobiKwik is a real survivor. And that is a trait and a value I love. So that is great. Now, talking about things I do not like, the largest point being they are in a market with huge competition, with huge brands. And I don't think they have real moat to win the business. They are competing with Paytm, Razorpay, Cred, and all other major and big players, including PhonePe, Google Pay, and what not. So that definitely is going to be a tough climb for them. So all this put together, yes, great valuation. Maybe it can be part of your portfolio, but then, I can't have like real high hopes from the company or the stock as such.
I mean, even the grey market premium is showing a 50% listing gains.
Oh, there is a point around that. Okay, so I was just again like reading stuff, and then I came across this. Many years before, in the like unlisted private markets, in the unlisted space, single MobiKwik share was being traded for 1,200 rupees.
Damn.
And now the IPO is coming at around 300 rupees. So the problem being they had a valuation cut in the past. To be very precise, they had a valuation of over $1 billion in the past. And today, the IPO valuation is happening at around $250 million. So that definitely is a concern, right?
Yeah.
So
absolutely.
even though things are looking nice now and it's a bargain for the investors,
Yes.
you're are you catching a falling knife?
Yeah.
That's the question maybe.
Yeah,
Right? So
yeah.
if it was a public market, we would have said that, hey, the valuation, the stock has crashed so much. Should you be looking into it? Right? We would have raised that alarm. But now since it's their IPO, they've not been public yet, I think investors are missing that point.
Yeah, that's
Absolutely.
where again I'm respecting the company as to how beautifully they are timing it, because you cannot even call them a falling knife today because yes, valuation cut has happened, but in the last 2-3 years, if you see, the revenue was stagnating around 500 crores.
Yeah.
I'm talking about FY 22-23, but this year revenue has increased to 900 crores. They were loss making in tunes of hundreds of crores in the previous financial years. This year they turned profitable, and now they are coming up with an IPO. So no one can actually look them in their eyes and call them a falling knife as well. So like it's very, very, very interesting and beautifully poised.
Yeah.
So let's watch this out is what I say.
Absolutely.
Anyways,
Time
let's
will
move
say.
on.
Yeah.
Yeah.
So talking about falling knives, I think we should move on to the third story, which is I saw a lot of interesting videos and a lot of people discussing tweets even around FMCG falling and not performing recently.
Absolutely.
Right? Even in the last week, I know very short-term view, Nifty FMCG has fallen by 3%, while Nifty has stayed somewhat flat.
Yeah.
In the last year, while all sectors in the Indian market have been positive, FMCG is the only single one in red, right? So I think it's the right time to talk about FMCG. What is happening there? Why are the stocks not growing? I think it could be a really interesting topic.
Yeah, that is where I saw this interesting tweet as well, and that is regarding Dabur. Dabur again is one of the largest FMCG companies in the country. So Dabur, if you see, the stock price has not moved from 2020. So you are getting Dabur at the price, at the valuation at where it was during 2020, during COVID crash.
Yeah.
So yes, I think the matter is real. FMCG stocks haven't been having a great time, but yeah, let's talk about it.
Yeah, even major FMCG companies, if you look into, are down by 15-20%, if I'm not wrong, from the recent September, October-ish levels. So it's been like a good fall that these stocks had, and people are looking if they can average out or invest more. So what is happening there? What do you think we should do there?
Yeah, there is this narrative of Bruised Bluechips which is being thrown around. So
Yeah.
are FMCGs Bruised Bluechips? Are they like real great companies which will always stand the test of times, just being available at good valuation? Why are they even falling?
So I think it's a time correction which is happening in the market right now. The revenues of these companies are increasing, but at a very slow pace. So the market is punishing them. So whenever a company is growing really fast, the market gives them an added P ratio, an added multiplier. And that's when valuation expansion happens.
Yeah.
But in this case, that opposite of it is happening, and the companies are getting crushed. Valuations are getting crushed, even though they're still profitable, still revenue is growing, not at a great pace, but still it's growing. Valuations are getting crushed, and the stock prices are not moving. So if you're looking into the giants like HUL, even Dabur for that matter, who you talked about right now, they're not able to increase their revenue, not even by 20%, not even by 10%, right? Their revenues are stagnating. And I think that's a big problem for the industry right now.
And that's exactly where I want to talk about this popular narrative which is going around right now, which says that there is this growing affluent class in India who want to spend more for better products.
Absolutely.
Right? And that's, again, we've been speaking a lot about quick commerce.
Yeah.
Even if we are users of quick commerce, and if you go to a Zepto or a Blinkit or Swiggy Instamart, and if you search even for a bread for that matter, your popular FMCG brands like, I don't know what, Elite, Modern, I think they're Kerala brands. But again,
Yeah.
My point is popular FMCG brands do not come. A lot of D2C, cool, gourmet, boutique brands are coming, and their prices are high.
Yeah.
Their prices are high, and supposedly their quality is also high. And this growing affluent class, they are happy to pay more for this, like, talked about better quality.
Protein bars, chocolates, everywhere you see that the so-called listed FMCG company brand products are not even showing up. You, just like Sharik said, even if you look into Amazon, even just search on Google, these companies, because of VC funding or whatever, or their marketing spends, they're putting so much of money into marketing that they are, kind of covering up these listed FMCG products. And I can see even in the revenues and everything, they're not growing, maybe because their sales have come down by a lot, and these all new age startups have, dominated the recent times.
Yeah.
Yeah, so the point being, with the advent of all these D2C brands which are doing really nice, these FMCG, the large legacy FMCG companies, their revenue is taking a hit. Another famous example I can think about is, again, a simple one, quick coming on top of my mind is, Gillette used to dominate the shaving and that market, grooming market.
Yeah.
Now, Bombay Shaving Company has come. And I hope the viewers can also relate, right? I mean, with whatever you buy today, you're not buying from legacy brands anymore. A lot of the things you're buying from these new, cool D2C brands. So,
You're buying into the founder, you're buying into the story.
yes.
Right? There
and
was
the apparent higher quality.
there was a recent survey run on Gen Z, right? Where they asked about what do you buy a product for? And a lot of them replied saying that people buy the product for the founder. Okay, they relate to the story of the brand,
Right.
and they absolutely look into. So maybe that's the next step of marketing, the next step of how D2C and FMCG companies are supposed to grow in India or even across the world, and these legacy players are maybe lagging a bit behind.
And also one thing, these legacy players, I think, took Indians granted a lot. They cut down the quality by a lot. They started, adulterating into the
That
products.
Foodpharmer guy keeps
Absolutely.
coming on your feed and keeps telling that how
Yeah.
these big legacy brands, the same brand they have in US and the Western world, but their product, the same product, same brand, when it comes to India, the quality is very, very subpar.
Absolutely.
So
Yeah.
they've been doing
So actually
great
people
stuff.
get pissed off,
Yeah.
and like Ajay rightly said, these new age startup founders going on YouTube, going on
Yeah.
Instagram, going into podcasts
Yeah.
and talking about their product, and even actually going to their factories and showcasing the product, how it is made,
Correct.
is causing some authenticity, and that is bringing up the sales, I guess.
So I have a friend who used to work in a listed company. I'm not sure if I'm supposed to say the name. So it's a very popular listed company whose major product is oil. Right? A specific oil.
I guess everybody can understand by now.
Right? So in the years of 21, 22, I remember their sales went up, right? And they had huge parties and everything was great. And the major reason that their revenue went up was they increased the prices. They knew that even if they increase the prices, there are no competitors for their product. So they were so confident that they increase the prices. And in 23, right, year 23, they found it hard to sell that product, right? When the rural demand started decreasing, when inflation started burning a hole in people's pocket, it became a real problem. And after that, he moved into a different company. Again, I can't give any names here, but they're very popular in the men's deodorant space. Okay. Yeah. So in this company, whatever he's saying is that they have no knack, at least the Indian wing of this company have very less knack for online marketing, right? And they've very less marketing for, and they've very less idea about how to market this product and how to sell it online, right? And they're struggling with it today. So all these new age founders who are coming out with their innovative products, they're also coming out with innovative marketing as well as innovative channels of acquisition for all of their users.
Yeah, I feel these big players that we are talking about are often slow in, re-innovating themselves and being quick in the market. So they have a lot of systems in place that even they want to, let's say, change some 10% composition in their one product. I think that will take them years. And in this time frame, new age brands will come in and, dominate the market and take that share.
Right. I'm absolutely sure it's very difficult to innovate at that scale.
Yeah.
But I understand the point. We should absolutely establish and be very well aware of what's happening. But at the same time, I want to come back to the crux of the topic, which is, hey, should FMCG investors panic? That's something I really want to know. Yeah.
Yeah, so even with all of these points, even the ones which I talked about, I would still say Nifty FMCG is one of the best places for investors to have an eye out for. Because if you're looking at data and you're looking at Nifty CAGR or its existence, it has given 13.6% average return CAGR to
Nifty.
its Nifty,
Okay.
right? Since whenever it started to wherever it is at right now. But Nifty FMCG has given 14.9% and all while being a defensive sector.
Yeah.
What does that mean? It does not fall when the market is falling. Right?
Right. Even during
yeah.
the COVID crash, when the larger market fell, Nifty fell, a lot of other sectors fell, FMCG stood strong. They recovered also pretty well. Yeah.
So I think we need to get into a deeper analysis into this, guys. I think next week, let's come back, same table, same place for all of our viewers out here. Let's do an in-depth analysis of each sector. What is their returns that they got? What are the drawdowns that you can expect from each index based on their last 10, 15 years data, and then we can try to make inferences from that data. Okay, what do you say?
Excited. Let's do that, definitely.
So-
yeah.
And see if there is any pattern, and the pattern could repeat, and maybe a future sectors that we could invest in FY25,
Yes,
so
yes,
that we
let's
can
do that.
actually do
Yeah.
that,
Yes.
right?
So
Nice.
do get subscribed if you're interested in that as well.
Yeah, but coming back now, what you're saying is Nifty FMCG has been a good index so far. It has been giving good returns. The volatility has been less. It hasn't been giving a lot of red years as such. So your point is again from the past. That is what you're talking about. Hey, past it was great. And that is something we already discussed. In the past, FMCG companies, these legacy brands were the only brands were available out there. Cucumbers was not a thing. People were not getting exposure. They did not, or there was not even the culture of people ready to pay more for higher quality. Now that is changing. That is a discussion we had.
Yeah.
So given that, though FMCG has had a great past, with the advent of all these new brands, isn't that a threat? What about the future of FMCG? That is what I would love to know.
Absolutely. This new age startups coming up, they becoming big and they coming up with their IPOs.
Yes.
And they dominating these old OGs of FMCGs.
Yeah, they could be the legacy brands of the future,
Absolutely.
replacing or killing the current
which
ones.
has more potential.
Yes.
Talking about that, I would like to raise the example of the very recent story of Yogabar and even the very old story of Thumbsup, right? Yogabar got acquired by ITC. Thumbsup, again, which was owned by Parle, I think, got acquired by Coke, right? So these are, this is a standard operating procedure of all FMCG brands. They'll have down years, they'll have new people coming up. They just go out and acquire it because these are cash-rich companies. You look at the Nestle India, you look at HUL, you look at Dabur even, they have a lot of cash reserves that they can afford to go out and buy these brands, right? And the IPO story, what we talked about earlier, is the threat on the other side, where if they're profitable, if they're D2C, maybe they'll go their own route, but there is also this strong route that FMCG companies have proven in which they just go out and acquire their brands.
No, I see your point. I get your point. I completely understand that it is not a new thing, and they have been doing this for a very long time. A lot of curry masala powders, when I quickly think about Eastern got acquired, Brahmins got acquired, a lot of brands which again were D2C, cool, created trust among people, like you said, and they once they grew big enough, these legacy brands coming in and buying them. So I get your point. So are you saying that like maybe there are a few small companies who would actually play out the David versus Goliath game? They'll stand strong, and they'll maybe, like Mama Earth for that matter,
Absolutely.
they'll might not sell. They'll play out their journey, do their IPO, but only few would do that. A lot of them would just sell for large money to these big companies, and that is how the big companies would continue having great days in the future, is what you're saying.
So personally, I believe, like rightly said, Honasa coming up with their Mamaearth, becoming giant and getting listed and doing well also right now. In future, there could be so many companies coming into this segment, and they could be part of this FMCG sector. And now that we are looking into sector as a whole, maybe these companies might replace those stocks.
Yeah.
Oh, like how we talk about in Nifty.
Absolutely.
Good companies will
Yes,
Yeah.
come
that
into
has
the
killed
index.
all our discussion so far, because we are talking about Nifty FMCG as an index, and an index, by the nature of being an index, it will keep churning out the bad players.
Absolutely.
And all your new big upcoming good companies would only keep coming in.
Absolutely.
And the index is only supposed to do good.
Yeah.
So
Yeah.
that's
So
also
probably I would bet not on individual stocks, but if I'm like bullish on FMCG, because one thing I believe, as long as humans are alive, they need food, they need medical.
Yep. Consumer goods.
Consumer
Fast
goods.
moving consumer
Absolutely.
goods.
So as long as humans are alive, these things should strive and
man.
should go move ahead.
Beautifully put.
Yeah. So,
Beautifully put.
that's a great thought.
So Nifty FMCG as an index, as you rightly said, has given great returns, has been a defensive sector, resilient over time, not falling a lot, even protecting your portfolio even when the other sectors are falling. So that is great, and that would continue.
Absolutely.
It's just that you have to be careful in betting on individual FMCG stocks. They might go away. I mean,
Absolutely.
I understand your point of them acquiring small players, but what if you're questioning the spirit of Indian entrepreneurs?
Absolutely.
Right? What if they really want to build out brands for themselves? So those stories could play out.
While
Yeah.
Ajay actually said that these companies are struggling to market themselves, grow themselves, these companies can outshine and, they can replace these big players.
Yeah, let them do their IPO, come into the index organically. Like how we talked about MobiKwik coming into a space, fintech space, where every other player is not making profits. Paytm is hugely loss making. They started making profits, and who knows, they might be the next giant. Right? They have the potential to be that, right?
So so the bottom line being Nifty FMCG, since it has not moved this year, is there a chance that it could give great returns in the coming year?
So, if you're looking at the past data, Nifty FMCG performs the best when market is kind of consolidating. Okay, when the market is on a crazy bull run, like it is after 2020, FMCG stocks or the FMCG index doesn't perform that well. This is not just data from India. This is data from across the world, where FMCG is always considered as a defensive sector. So what you have to understand, if you think that the market will outperform, it's going to be a crazy bull rally for Nifty next year, FMCG might not be the right bet for you. But if you think that, okay, Nifty is going to cool down from here, it could have a sideways move, I think FMCG will be the one to outperform in such a market.
But again, Ajay, I strongly believe in our Indian entrepreneurs. I want them to outshine these all big OG companies and, bring some different change to our whole ecosystem of FMCG segment and, give great, amazing returns to all of us.
And let that happen. That's the beauty of index investing.
Absolutely.
As we talk about it.
Yeah.
So I think that's the right place for us to wrap up today's show. Again, I think a lot of interesting stories were discussed, but the most passionate points I think came out in the first SGB story as well as in this story. That's my
Absolutely,
personal opinion.
absolutely.
Again, highly personal. So
Yeah.
yes.
But again, guys, let's hope it's just a rumor and
Yes,
nothing is
yes,
coming up.
that's
and,
there. Yeah.
and they have still 18,000 crores budget allocated. So please, RBI, please, central bank, use that budget and give us out our SGBs, man, please.
Yeah. So I think that's the perfect time to wrap up this show. So thank you all for tuning into the 5th episode of the Aftermarket Podcast. So as always, you're the 4th participant of the show. If you have any thoughts, comments, or even suggestions about any of the discussions that we had, please make sure that you let us know in the comments down below. So yes, this is Ajay Ajit signing off. See you all again. Bye-bye.
But again, guys, before just going away, don't forget to check out our Clips channel and subscribe to there as well.
Thank you and bye-bye.